You can use QuickBooks to track upfront deposits or retainers and to apply them to invoiced amounts. Upfront deposits are funds that your customers have given you for services or products you have not yet provided. You initially record these funds as a liability, not income, because you have not yet earned the money. You record these funds as income after you have provided the services or products. Let's say you are an attorney and you want to accept a retainer of $1,000 from Maria Adams. You need to record this as a liability. Later, you will have a 2-hour meeting with her. You will apply a portion of this retainer to the invoice for this service. If your company file does not yet have a liability account for retainers, you need to create one. Click Chart of Accounts. Click the Account menu button and click New. Click the Other radio button and select Other Current Liability as the account type. Click Continue. Enter client retainers in the Name field and unearned retainers in the Description field. The account will have a 0 opening balance unless you click Enter Opening Balance and enter an opening balance for the account. Refer to the in-product help for information about entering an opening balance. Click Save and Close to return to the Chart of Accounts. Your company file will also need a special item for retainers. First, click Home. Then click Items and Services to create a new item. To create an item for retainers, click the Item menu button and click New. Because you are creating an item to be used for future services rendered, click the Type drop-down arrow and select Service. In the Item Name Number field, enter Retainer as the item name. Since you want to attach this item to the Client Retainers account you created previously, click the Account drop-down arrow and select Client Retainers. Then click OK to save the new item. With the Client Retainers account and the retainer item, your company file is now ready to track retainers and apply them to invoices. Let's record Maria Adams's $1,000 retainer. Click Create Sales Receipts. Click the Customer Job drop-down arrow and select Maria Adams. Now select Retainer, the item you previously created, from the Item column drop-down list. Click in the Rate column, type 1,000, and then press the Tab key to enter the rate. Click Save and Close to record the transaction. Now that the retainer amount for Maria Adams has been recorded, you can draw from it when charging her for services rendered. Let's create an invoice for a 2-hour meeting with her and draw from her retainer balance. Click the Invoices icon. Click the Customer Job drop-down arrow and select Maria Adams. On the first row of the invoice, click the Item column drop-down arrow and select Meetings. Enter 2 in the Hours Quantity field and the billing rate of $150 in the Rate field. Press the Tab key and QuickBooks calculates the amount for this line item. In this case, it is $300. On the next row of the invoice, click the Item column drop-down arrow and select Retainer. Click in the Rate column and type -300. Then press Tab on your keyboard. Notice that the total for the invoice is now $0. Click Save and Close to save the invoice. That's it. You have recorded a retainer, and later you have drawn from it to pay for a service rendered. When you deal with upfront deposits or retainers, QuickBooks does several things behind the scenes. When you accept upfront deposit or retainer funds from a client, your undeposited funds account is increased, the retainer or liability account is increased, not an income account. Accounts receivable is not affected. When you apply upfront deposit or retainer funds to an invoice, your income account is increased. The retainer liability account is decreased. Again, accounts receivable is not affected. The income from the item is reflected in your profit and loss report. To learn more about QuickBooks, go back to the Learning Center and select another tutorial from the list.